Welcome back to Passing Notes with Chaz Guinn. My name is Hayes Brumbeloe. I'm your host, and this podcast is all about real estate. More specifically, the buying and selling of mortgage notes. I am joined by my buddy, my pal, my business partner, Mr. Chaz Guinn. How's the lumberjack business?
I don't think the viewers know that I have an alternate business on the weekends.
Stacks of wood.
You moved to Texas, and I'm like, you know what? I might as well just get all in.
I love it.
So
I love it. No, I do love that shirt. If you leave it at my house, it's not going to make it back to yours.
It's
mine. Let's jump in, man. Let's jump in. Episode 6. These things are just flowing by. I think obviously the viewers, the audience are digging it. You're a wealth of knowledge, and I think I personally love these sit downs because it's like every time we sit down, I learn something new, and I know they do too. So thank you.
It's my pleasure because I want to see folks get into the space.
Right.
I want to be able to see a new wave.
Right.
We've been trading with a lot of the same folks,
Right.
and we've built deep relationships with these folks. We love that.
Yes, you have.
However, some of them have been getting out of the space over the last few years, retiring and
Right.
and doing some things that they want to do and
Sure.
relaxing. And so we're also starting to see this newer face. From all different walks of life coming into the deal. And so, we said, look, let's start teaching these guys. Let's start having them kind of hear conversations that we're having in the industry on a consistent basis and kind of be that eavesdrop a little bit to the things that we're talking about. And I think by doing that, we kind of unlock this ability to come through the big door that we're trying to create, right?
It's that front door we were talking about. All right, so here's the deal. I want to give a real world scenario. Revolve Capital takes down a large pool of notes. What does that mean for the buyers? And then a follow-up to that is, what's the buyer getting? So we take down a big pool. Mm-hmm. What's that mean for our buyers? The people who are becoming members of Revolve Capital, they're getting access to that pool. What does it mean for them?
Within our membership, we have different tiers,
Right.
different levels of education, different levels of experience coming into the space.
Right.
So what we have, when you guys know that we take down a big pool, we do constant press releases, we do constant updating of our database to say, look, we just came into 500 new notes, right? What that should tell our buyers, what that should tell our clients is the flow is going to be continuing.
Sure.
The consistency of the flow will continue. In this space, when you get excited, you get the toolkit, you get the business in a box we've talked about, and you're saying, "Look, I'm really encouraged by the consistency of flow that you guys are showing us." And if that dries up, right, and that flow is not as consistent as you need it to be, because what happens when folks get excited, they go out and raise capital,
Right.
Because they want to be able to take true market share of the flow that they're seeing.
Sure. They want more and more.
And if that flow stops, that really becomes problematic for capital that you just raised.
Right.
So it's a chicken and the egg.
Sure.
You have to have one before you have the other. However, both do need to coincide.
Sure.
So big pool of notes relates into consistent flow.
Sure.
Straightforward.
Sure. To follow that up, though, from a buyer's standpoint, what does that mean after we've taken down a big pool from a due diligence and servicing aspect? What are they getting? Talk about the Revolve Capital package that they're a part of.
Absolutely. Value, occupancy, title, tax, servicing comment, pay history, all docs, the real story, today's market values, right? You need to see the picture that we see. Right. And we talk about this internally a lot, that if you have misinformation, that's usually what happened back in 08 and 09. These big sellers were putting out these tapes, these big pools, and were hiding certain information.
Sure.
What was going on with Mr. and Mrs. Jones,
Right.
Why'd they stop paying? Servicing comments weren't truly being shared.
Right.
So the title work, the understanding of the story that you had to go through is far more transparent in today's market than it was 15 years ago.
Sure.
So I'm glad to see that there are sellers out there that are coupling their product that they're selling with due diligence, but they need to be seeing real-time info.
Sure.
They need to be seeing real-time market values, which a lot of sellers don't. They'll show you a value from 2 years ago.
Right.
And now you're looking at in the entire package. You guys need to see what we see.
Sure.
I need to understand that you're saying that this is in the 7th inning of the ball game with respect to foreclosure. We're not verifying that. Show me what the attorney said to you that we then can also put into our package that you can also verify.
Sure.
Right? So servicing comments. It's kind of a industry jargon. What is that?
Yeah.
Okay, that a servicer is dealing with a homeowner, okay? And the homeowner calls in all the time, says they couldn't make their monthly payment because of X, Y, and Z, right? Or they're going to be late this month, or they need a reduction in monthly payment. All of this dialogue between servicer and homeowner is tracked in a servicing comments section. And those servicing comments can be shared with you if you so choose to buy the file. Okay. Every seller that you guys work with absolutely should be sharing with you guys your servicing comments. It's a must. It's a mandate. You don't get it, I'd walk away.
No doubt.
There's something that's being hidden.
Right.
Okay. So when it comes to the due diligence side, I think that this is the crux of this business. I need to see what you see.
Right.
I need to be on the same page with you so that regarding my ability post-close, after you buy the file, usually that's when we always ask, now what?
Right. That was my next question is from an advisory role, where does Revolve Capital, where do they play with making sure, okay, we took down a pool, buyer takes some of the notes, now what?
So
because at the end of the day, you want to make sure that they're taken care of. You're still holding the hand. You're still holding their hand.
Internally, how we talk is, especially on our sales side, half of your job is to get somebody to make the deal closed, funded. Okay. The other half of your job is to make sure they go out and make money.
Exactly.
Okay. Because guess what? You ain't coming back for trade 2 if you don't make any money. That's simple. Okay. What we try to get to internally here at Revolve is how do we get to trade 3, 4, and 5?
Correct.
That only happens if trade 1 goes well.
And they go from 1 door to 10 doors.
You won't even go. You won't even think about that 10th door if trade 1 went horribly. Right. And what could cause something to go horribly? Okay. You get inside of the house and it's absolutely shambled. You get the collateral file document. Most of the docs are missing.
Right.
The servicing transfer doesn't happen for months when it should be happening 15 days after you buy it.
Right.
Okay. Chances are sometimes it gets extended to 30 or 45 days, but that should be tracked, right?
Right.
A lot of issues will happen post-close that need to be well managed. Internally, we say, if you can't get that folks and get these relationships to come back to you for trade 2, then you didn't do your job after trade 1. Trade 1 says, look, thank you for that purchase. Now let's talk about strategy.
Right.
Okay. These ones right here are a ways out from foreclosure. I'd quickly flip those.
Right.
Okay. These ones that are sitting here occupied, that you can see their servicing comments, they're saying they want a modification.
Right.
That's a mod play.
Yeah.
And then what about these later stages?
Get them performing.
There it is, right? You see all these different strategies we talked about on a few episodes ago.
Yeah.
But we work internally with a lot of folks to say, how do you rinse and repeat your money? And that's because you have to be strategical on what my investment is and what's my time period.
Sure.
We want people to be very disciplined on time periods.
Right.
A lot of times 3, 4, 5 months have gone by and the properties are not turning over.
Sure.
That's because you've allowed your deadlines to be surpassed.
Sure.
That's on you as the manager.
Right.
We teach this. Okay. You get to day 31 after you let a 30-day process go on. Day 31, pivot.
Right.
Then let that process carry out for another 60 days. Day 61, pivot. Okay. We teach these strategical moves so that the ball is constantly moving down the field.
Agreed.
If anything gets stalled, that means your money's stalled. Loans are not turning over. The rinse and repeat efficiency is stopping.
It's not happening.
That's the issue.
Right.
So this all comes back to due diligence.
Yep.
What's being shared, what's being underwritten, what's your strategic approach, and all things we're trying to teach our folks.
And that's exactly what the buyer wants to know, especially a newcomer. They want to know that, when Revolve takes down a pool, they're saying, okay, I positioned myself to take down 4 doors. Let's go. Let's get in here. They're gonna take those down, and then what? And then that's the important part that I think that must be made clear, that it doesn't end there. We're just halfway through it, because we need to make sure that the buyer is making money on everything they're doing. Otherwise, They don't care about Revolve Capital.
Exactly. They're going to go and try and find another seller to create a deeper relationship. For us, we've been working with certain folks for 10, 12 years already. Right. Because we did right by them on the first trade.
Right.
We followed through their process. We now know their wives' names, their kids' names, etc. Right. That's because there's a true relationships behind this business. But guess what? We don't ever get there if you didn't really show concern for after you made the investment. Now what?
Right.
And that's something we know we differentiate ourselves here.
For sure. That's not the norm.
I'm glad you mentioned that, because even that's something that you first noticed when you came with us, is that like you guys actually are diving into the caring about these folks.
100%, because I couldn't find the front door.
and so we're saying here's
so
the
it's like
big
once
door.
you do find the front door, you walk in, you're like, so
now what? So we're saying, look, we know we're different. We know we're probably taking a different approach, but this is why we talk internally all the time. We have created a Wall Street bridge down to a Main Street investor. And if you're a Main Street investor, that's anybody and anyone that says, look, I like real estate. I like learning. I want to get into that space. I know how to set up teams and infrastructure. I've done that in X, Y, and Z business. Right? It's applicable to here, right?
And they can see the world we're in right now. They can see the market. They can see the issues, and they're saying, you know what? I need to diversify.
Big time.
I need to consider a lot of things. And this is definitely one of them that should be considered.
We've seen a ton of commercial folks, a lot of the folks that are in the commercial space, a lot of folks that have been in the general contractor fix and flip space.
Oh,
you're saying
2 years ago you couldn't find a GC
at all. Thank you. Right? I mean, how many renovations? All right, and then you're like, look, I can't even get this guy to return my phone call.
They're booked out 16 months because everybody was sitting at the house. They're like, I don't like that. I don't like that.
But you think that's going to slow down over the next couple of years? The GCs work? Oh, now these guys are like, now what?
Yeah.
What pivots am I making? And that's why we're like, welcome. Okay, let's show you how you can still get to the real estate, how you can still employ your fix and flip strategy. The business doesn't need to stop there, man. You just need to find a different source. Right? And that's why we're saying, hey,
hello,
we're right over here.
Hello.
So,
no, I love it. I think it's important for the audience to understand that it's not a I hate to say like the one and done kind of scenario. It's because at the end of the day, I think Revolve Capital is all about long-term relationships, and that absolutely it's not just from a sourcing, because that's obviously important, but it's also the buyers. You know, it's if we do our job right, we make it super easy for someone to be very successful in this space. And it can be daunting at first, you know, especially if you're new to this space, you don't know. Okay, I don't want to trip up. I don't want to hit the landmines, and I feel like the landmines are getting cleared because it's a business in the box. Everything is being provided, and especially the education. You know, if you can teach someone the steps, they can replicate it.
Look, primary market. Open house that you can walk through on a Saturday. You and your wife can drive there. You can get out. You look at the property. You're like, hey, we like this. We want to make an offer. Okay. Then you're going to enter let's just say your offer is accepted.
Right.
Now you're going to enter into a third party transaction used by escrow to run title, tax, and uncover any risks about the property.
Right.
You're also going to run your inspection. Have your appraisal written. These are all things that we're still doing in this space.
Correct.
But that's all due diligence, right? I made my offer. Let me run diligence. That's a primary market, okay? In the secondary markets, the capital market space that we live in today, all that information is not straight up and in your face.
Correct.
You don't get to just walk into the house and see everything that you want to see.
Right.
However, because of that risk profile, there's a huge reward on the other side.
Correct.
Much risk also comes with a lot of reward.
100%.
Right? So very little risk comes with little reward, right?
Sure.
That relation there for us says, I get there's not info, but we're trying to create a secondary market to start acting like a primary market.
Right.
What does that mean? Show me X, Y, and Z before I make my investment, right? Because I need to see things I would traditionally see in a primary market.
Right.
So that's why we've used a lot of the analogies regarding Amazon.
Yes.
It's because they have normalized consumer good purchasing.
Right.
We are trying to normalize the real estate investing play.
Right.
It needs to start acting and treating itself like a primary market when it comes to diligence servicing.
Sure.
When it comes to sharing information, when it comes to saying, hey, look, here's the strategy I would do with this asset.
Right.
Okay. A lot of sellers say, look, here's my tape, here's my product, make your bid. It's a one and done type of scenario, right? I don't care if you come back because you're a dime a dozen and I'll go find another guy or gal to do the same thing.
Right.
We couldn't think differently from that level of thought process. Sure. We say, look, I don't want to have to rinse and repeat a new relationship every single day.
Sure.
I want to be able to create substantial relationships that become programmatic. Right? They're looking for flow, and so are we.
Sure.
I look for flow on upstream, right? Exactly. We do a lot of deals with the government. We do a lot of deals with tier 1 banks. We want flow with these sellers, right? Because we're here to really create systemic change. Sure. How do you do that? You do that by keeping folks in their house. Avoid foreclosure altogether. Foreclosure is inevitable, especially on a vacant property. Okay.
Sure.
But like we mentioned a few episodes ago, we're not looking to displace families through the foreclosure efforts, right? However, we're trying to get you to stay and pay.
Sure.
But if you're unwilling to talk to me to do it, foreclosure may be a strategy and a tactic you employ to kind of get a response from the homeowner.
Sure.
Right?
Sure.
Doesn't necessarily mean I follow all the way through to take the property and displace a family. However,
because Revolve has never displaced a family.
That's just not our ethics. It's not our core. We understand it's a party.
It's not the goal.
It's not the goal. No, the goal is how do I take a non-performing and get it back to re-performing, right? Because there's an investment strategy there that is both a win-win scenario for you as a buyer and that homeowner as well.
For sure.
And the community now, it doesn't have to see John and Jill move out of the neighborhood, right? Because they couldn't come to terms with their lender, right? So
uproot their family, uproot their kids, all those.
We need to change the conversation, Hayes. Right. That's what we're trying to do here. Is let's change that chat.
And what it also does is it brings more firepower to helping more families get through scenarios like that. Because at the end of the day, you're talking about, obviously there's delinquencies coming. Yeah, we've talked about what the last 2 years has kind of shelved that we haven't even seen yet. But it's like, if you can build a big enough, bench of buyers who can come in and say, look, I'm in on that. They're jumping in. That's more families at least being helped or at least modified. Because at the end of the day, if it's not being touched, that scenario of them being displaced happens more often than not.
Isn't the goal when you're getting into the investing style? I don't know if this is everybody's goal, but my goal is I want cash flow. Sure. I want my money to be making me money while I'm sleeping.
Sure,
right?
Absolutely.
And so there's a lot of social media influencers that kind of push that same message, right? So and we're absolutely praising that message. Cash flow through real estate investing is right here. Okay, especially when we have seen the flood of institutional capital coming into the rental space. Your landlord now ain't John, who's down the street that owns your rental. It's a big box bank, right? It's some sort of institution that you're making your payment to New York, but you're in Alabama. Right. That's a different landlord in today's standpoint, 100%. Right? So we need to change the conversation of how cash flow can be created for families, for people. Sure. Right? We don't need to make the corporations any more wealthier than they already are, man.
Sure.
Let's create that renovation capital back to people. Right? Not upwards to institution. Right? And that is where education, right? I know I've talked about that a lot, but the educational side for us isn't going to take a ton of courses over a weekend and then have paralysis by analysis. You're like, oh, there's so much I don't know.
Now what?
And we say, look, no. Let's keep this very, very simple. Sure. We've joked about the iPhone. I mean, and I think what was beautifully done by that company is they've created a very sophisticated, tough tech piece, but have allowed our 4-year-old soon-to-be to be able to swipe open the phone with ease, right? But that simplistic nature of a very tough idea is what we're trying to do. We know this is a tough deal. This is a tougher story, right? Delinquencies are going to go up. You're having a tough story with homeowners and families across the country. But what happens when that starts to seep into the neighborhoods that you live in? Right. What conversation now are we having with these homeowners to say, we get what's going on. Okay. What happened? Right. Let's talk about how we fix that. Those are not conversations that are being held in big box office servicers. That needs to be changed. we need to change that conversation, and it starts now.
Yeah.
So that's why we're look. It's that we understand that the avenue into the business does seem like there's some barriers of entry. The business kind of seems fractionalized at times.
Sure.
You go here for this, you go there for that, you go here for this.
Yeah.
We're trying to say, well, it's all
You
right.
hope you're not buying from a broker. You hope you're getting real source.
Oh, I mean I'm glad you brought that up. That's a big challenge in our space,
Sure.
right? These joker brokers, right? A guy or gal that tells you, hey, this is my tape.
Yeah.
And you're like, okay, but then you go to verify that's not the tape. That ain't your tape, right? And we get what happens. There's legit brokers in this space.
Sure.
Right? Guys that folks and companies that act as a fiduciary for a seller.
Sure.
They have an exclusive, right? We deal with a lot of them, right?
Sure.
However, there is a market that's wild west out here.
Right.
Right? Your guy that's saying, hey, look, you give me this tape for $1 million, I'm going to go flip it for $1.5 million and make myself a quick $500,000, and I'm just doing that from the comfort of my house.
Sure.
Look, if everybody could do that, everybody would do that. It's a little tougher. Okay? So smoke out the joker broker, and that's done through diligence. That's done with getting yourself with a reliable source, right? I think we've driven that a little bit here, but we know a lot of the viewers right now didn't know who we were.
Sure.
Just stumbled upon us.
Right.
Don't know Hayes, don't know Chaz from Adam. And so what we're trying to kind of create is that, look, the space that we've been in deep now, sophisticated, smart, institutional. However, it can be relatable to the everyday folk.
Absolutely. And it's primed.
And the down cyclical market is welcoming not only new faces, but this is in this sort of market is where you double, potentially triple your net worth.
No doubt.
How do you do that though? You got to do that through a new angle.
Right.
So if you're a real estate focused person and there's a new way to start doing and pivoting how you make money, let's have some fun. Let's have some fun.
Gets me buzzing. I mean, you know what? I kind of want to just end it on that. That just that was a good episode. Thank you for stopping by. Make sure you like, share, and send this to your friends and family. Let's pass the word around. But make sure you go to Revolve Capital, become a member, start playing ball with us. We'd love to meet you, love to sit down with you, learn how we can put together a strategy that fits for you. But again, thank you for stopping by, and we'll see you next time. Cheers.